Good morning, YouTube. Good morning, X. How is everybody doing? My name's Max. My channel's name is The Covered Caller. And I hope everyone's having a good morning. The market's bouncing a little bit better this morning. Remember, everything you hear from me is not financial advice. Consult a professional advisor. All right, let's get this show on the road and let's look into these ETFs. And I'm trying to get used to my 2-monitor setup. I really love it, though. It's life-changing, but I'm still having a hard time getting used to it. All right, so let's check out the market. All right, well, we're bouncing. That's good to see. Here's the SPY right here. There was no gap up this morning. We opened within Friday's range, but we have now run out of Friday's range. Just from an order flow perspective, or a momentum perspective, whatever you want to call it, that's bullish. If we get accepted outside of Friday's range, can stay outside of Friday's range and don't immediately fail and fall back into it, that is definitely bullish. Still, though, I'm worried about this. I'm still worried the sell-off isn't over, but I'm always worried, so that's good. But I'll be happier whenever the SPY takes back this slow moving average, this 200-period moving average, and that also coincides with the 670 area. Now, however, there's a gap in the chart right here, low volume node, that I'm also worried about. I guess the first step for the SPY is to get over 668. Second step is to get over 671, but we'll take it one day at a time. Now, the reason the SPY is doing better is because Bitcoin's doing better. It's not totally correlated, but Bitcoin it's not down 5% like it has been lately. It's actually, I guess let's turn this back on. It is actually, Bitcoin is actually only down 0.5%, which is pretty good. Now, if you look at, and I think it's trading higher than the Friday's range. Let's look at IBIT. Yeah, IBIT doesn't trade 24/7. This is the SPY of the Bitcoin world. Liquid, you can trade options on it, and they do have a small gap here, but Rome wasn't built in a day, and neither was this. I mean, IBIT has a lot of work to do, or Bitcoin does. And if it turns around and starts to go back down, I think the market will as well. So especially if it makes a new low, that'd be terrible for the market. So we shall see. Let's look at Bitcoin itself. Bitcoin to Coinbase. Now, I'm looking at 70. While I was looking at 90, I was looking at this area that's in yellow. You can barely see it. Well, you can see it on that screen. I was looking at this area to hold the downturn, but it didn't. This was support. It turned into resistance, and it got right back up to there, started selling off again. It looks like it's still resistance. I want to see us get to 92 and then higher. This has the look to me of the sell-off isn't over yet, but we'll see. At least Bitcoin took back its slow moving average. They're over the 200-period moving average. They were even over the 50-period moving average for a little while. But we'll see. But if they start selling off again, I expect it to go there. But the good news is a lot of people smarter than me are saying 75, 76, that will be the actual low. I hope we don't have to find out, because I'm tired of my ETFs going down. I have a lot of ETFs that are based on Bitcoin. We're going to look at those like blocks and lots of them. And anyway, it's killing me lately, but that's fine. That's fine. All right. So what else do we have to look at? I guess let's look at the Qs. If it does get to 75, 76, I'll probably buy some more blocks. But right now, I just think it's early. I'm almost thinking about cutting blocks if we have a big rally today. Not cutting all of it, but cutting some of it. cutting half of it and then putting that money in a buffer fund or something. CAIE, maybe something like that. All right. Let's see. How many of you guys are here? There's 15 of you guys here today. I appreciate that. All right. So I'm just getting used to this 2-monitor setup, but I think it's a lot better. Oh, shoot. I didn't hear that. Jimmy Cliff died, the reggae guy. Huh. Well, that sucks. Now the Qs also didn't gap. They opened in Friday's range and have since gone out of it. That's definitely bullish. We want to stay out of Friday's range. If we go back into Friday's range, and especially if Bitcoin's going down, we'll probably go to the bottom of Friday's range, and or at least to the middle of it. And that would not be good. Qs have a lot of work also to take back the slow moving average, which would be a positive step, but that's up at 610. They also have a trading range up at 610, but then they have a low volume node at 606 or whatever that could possibly turn the market around. Sometimes there's sellers in those low volume nodes, or buyers, depending on which way the market's going. But anyway, hey, Greg, how are you doing, partner? Yeah, this is awesome. So I can see Greg's talking to me and I can say hi. If I want to put it up here, this is the greatest thing ever. I displayed it, but it's not displaying it on that screen. That's fine. I'll figure this out. And Marcus is here. I appreciate you, Marcus. All right. So let's do something else. Let's look at, let's do this. Gosh darn it. But now I'm back to the inception look, man. Sorry about this, guys. I want to show this freaking chart. I don't understand why I can't figure this out. I mean, I don't really mind I don't really mind the inception look. It doesn't bother me. I think it bothers some of you guys. All right. Gosh darn it. Maybe I just hit window. Yeah, that's what I have to hit. I'm used to, okay. So window. That, but then I can't share. I want to be able to share everything on that freaking monitor.
There's been over 16 times that Bitcoin's gone down more than 30%, 19 times more than 20%, 33 times more than 10%. It's volatile. It's going to continue to be volatile. Might be a little bit less, but it's
all right. Sorry about that. My computer came unplugged.
It's here to stay. It's going up. That's why
I just don't understand why I can't freaking do this. I don't really care. It's good for live streams, but I mean, it is good for live streams to be able to see your comments, but if I can't figure out how to switch back and forth faster. All right, so this is my diversified divas. So I was going to say, you may hear the background, the volume on in the background. The guy from Calamos is on. I've never seen him. The CEO, John. I can't pronounce his last name. It looks like a Greek last name. He looks kind of Greek. I bet Calamos is a Greek word. I don't know why, but anyway, I think we talked about that in Discord. Anyway, what he's selling today, I'll turn it down. But while I was restarting the computer, I've been listening to him. What he's selling is their hedged Bitcoin product. It's a buffer fund. We talked about buffer funds a lot on the live stream this weekend. They have a Calamos Bitcoin 80 series, meaning that it is you can only lose 20% in Bitcoin. If Bitcoin down 20, you have a 20% head start. It's a hedged equity buffer fund, and that's what. And of course, this is a great time for him to be selling that. I bet a lot of people wish they would have bought that 3 weeks ago, but that's probably why CNBC put them on. All right, back to the regular scheduled broadcast. Okay, so look over here. This is really impressive. I mean, look. Blocks up 5.11. Heck yes. Uncapped on the upside. ULTY partially uncapped on the upside. They use call spreads. KYLD, Howard does a great job. He's capped on some stuff, not capped on other stuff. Howard's just Howard is a true hedge fund style. It's WPay. Look at old WPay doing good. They are doing well. They aren't capped, and they also have a little 20% extra, little 20% a week extra. QLDY uncapped on the upside. Great job, QLDY up 1.92. Those are all beating the Qs. Not K-Yield. K-Yield's a little bit behind, but those are all beating the Qs. And then why is multi on here? Gosh darn it. I mean, I don't know why this has to be so hard. Did I not copy it down or something? Alt-div. Maybe it's unchanged. I mean, it's 25 basis points. You just can't see the resolution on here. So it is. It's actually up 25 basis points. Okay, we'll take it. We'll take it. So let me go back to here. So that's the daily change. Just looking at it from a 45,000 foot view, you can see this is the best day we've had ever since these funds have been out. I mean, we had a couple of other days that were close. My battery's low, but it's plugged in. It should be all right. If it dies again, I'm sorry. Anyway, that is incredible. I like to see that. Gosh darn it. I thought about just letting it charge for 5 minutes, but then you guys were here and I wanted to get back really quick. There's still 21 of you guys here. It'll probably ding and whatever. But anyway, that's really good. So let's look at the total return since inception, the rolling total return. And just from a 40,000 foot view, you can see that it's turned around and going the right way on all of these. All of these are up a little bit. ULTY is only down 15.4 right now. It's protecting capital about as well as K-Yield. It's down 14. But then there's a big drop off to blocks and ULTI, but that's nature of the beast. Hopefully those will come back, especially blocks needs Bitcoin to go up, but it would help all of them. But in any event, a rolling total return, Qs are down 4.3 and QLDY is down 5.3. It's only 1% less than the Qs. QLDY is really doing well. WPay is also doing well. They're down 13, where K yield is down 14, and blocks and ULTI is down 15. Those are doing well. Poor LFGY, it's down 19. Now it's not doing as poorly as blocks is, but that's because they do have a downside buffer. Blocks has no downside buffer. So in any event, an old GPTY is down 10%, doing better than WPay, doing better than K yield, WPay, and the rest of them, just not doing as well as QLDY from Defiance, or Chippy's doing well also. Of course, Chippy's based on microchips. SPY's down 2.3 over the same period of time. So it's been a rough December, but I mean, the SPY's only off November. This is basically the month of November. This right here is October 31st, but this is the rest of the month of November. Been a rough month, especially for the Qs, which are off even today after today's rally, still 4.4%. Okay, so what else do I have to show you guys? And I wonder if I can figure out how to do it. All right, I think I have it figured out. So let's do it this way. Let's look at the index buffer report. All right, index buffer report. Feed and 5E, yep, never fails. Up the most or down the most. Out of the SPY, compared to the SPX ones. Now, the other ones that are doing well are YSPY. That one is trading leveraged options. That's awesome. Developing story. I hope this isn't tariff news or something. It's Contessa Brewer, and she usually, I forget what she covers. Oh, it's an NBA gambling scandal. They arraigned somebody. Okay. Nothing to do with the market. Look at SVOL. SVOL's up 2.9. ZVOL's up 2%. FEPI's looking really good today, up 2.8. SEPI's really looking good, up 3.4. GPTY's up 2.5. GPTY most closely compares to FEPI, but FEPI's beating GPTY today. Great job, FEPI. Then there's Chippy. On the downside, it's Salty and YQQQ. I have both of those, of course. I also have QLDY. I also have blocks, and I don't have ULTY yet, but I have WPay, and I have Alti that's doing well. It's up. It did really well on Friday. On Friday is incredible. It absolutely had an incredible, probably the best day in the history of Alt-Y on Friday. In any event, the rest of them look like they're doing the same old stuff they usually do. All right. So what else do we have to look at? We can just talk if you guys want to. All right. Ben's up, but I guess I need to put, okay. That works. I see. It. Okay. Well, that's better. Okay. Hey, Ben, thanks for being here. I don't know if I've seen you around here before. I found out about two new ones, KAIQ auto callables on the NASDAQ, and one called XXV that tries to target 25 and pays monthly. Yes. One of them does auto callable bonds, but still the feature of the auto callable bonds is it's like a big hedge equity fund. It's like anything, there's any ill consequences. But yeah, hey, I'm sorry about that. But yes, XXV, we were talking about that on the live stream this morning, or on the live stream this weekend. That's a new one that somebody mentioned. I don't know it has a funny name. I don't know what that name is. Ancora or something. I don't know if that's the person's name or the guy I don't know. But anyway, yeah, that looks interesting. You also, Ben, you might want to check out XV, which does similar stuff, targets or has a 15% buffer. And I think it also targets a 15% yield. CAIE has a 40% buffer on it. You know, it's a bet the market won't go down more than 40%. Now, it doesn't mean the NAV can't lose. The market goes down 30%, it'll be closer to 40%, and the ETF will be a little bit less valuable because of but it means the fund, it doesn't lose serious money until it gets under 40%, I guess. But yeah, so XV is a bet the market doesn't go down 15%. And then there's one called, what's the other one? SBAR, SBAR, which also sells barrier options. Barrier options basically like a put spread, but in any event, they're all buffered, and yeah, they can work, and they would have really been good to have this. I wish I would have bought them when I was at a market. When the market was at the high, I bought blocks, and anyway, I really do like blocks. I believe in what they're doing, but I bought blocks and Bitcoin, and I've just been getting murdered on those. But anyway, all right, Ben, like I say, thanks for your comment. Marcus, what's going on, bud? Calamos added box spreads to their auto callables. I hadn't seen that yet, but I like that. Okay, Ben, you already know about these. I should have known. Yeah, so the XXV might be interesting to you just because of the extra yield they're going for. And of course, it'll be extra risk. To get extra yield, they're going to have to use a smaller buffer. But whatever, it's more of a bullish bet. But heck yes, yeah. I've never seen the guy from Calamos talk on TV. But that kind of explains the name. I think we looked up the name one time, and it was some kind of Greek mythology or something. And the guy looks Greek. He had a Greek name. I couldn't even pronounce it. So anyway, he looks like he has Greek heritage. Just like if I made a fund, I might name it something having to do with Scotland or something, because of my heritage is Irish Scottish. But anyway, all right, let me make sure I haven't missed any comments. All right, Ben. Ben wonders if these covered call funds could replace part of the treasury holdings with something like the auto callables or similar. I don't know why not. I know that the auto callables are becoming a lot more popular, and there's, I think, Innovator. Was it Innovative or Innovator? I always forget the name of that fund. They have, they are introducing an entire line of them, and so is Calamos. I do think that it's kind of the wave of the future or whatever. But yeah, that's not a bad idea, Ben. Not a bad idea at all. All right, it looks like the battery's charging a little bit. Let's go. So how do I check the darn market on this new setup? I guess I have to go over here, and then I have to do like that, and then I have to do like this. It is cool. One thing, even not having live streams, it's cool to have the market on another screen. Once I learn how to use it, I'll be like an old pro. Yeah, it's Innovator. Mark is correct to be Innovator. And them and Calamos have the best buffers. Innovator and Calamos are known for hedged equity buffer, whatever. I like the idea of CanQ because I'm a NASDAQ guy and I like uncapped upside. But CanQ's an interesting fund. It only pays 5 or 6%, but it gets pretty good upside. And that one's from Calamos. Yeah, so I really like the looks of this, but this is something to watch out for. I mean, this happens lots of times. We revert to the prior point of control in a downtrend, and that's a great place to sell it. We did right here, or there's numerous examples. We do it all the time. But anyway, so bulls want to get it over that point of control into the next point of control. May not happen in one day, but or I guess the other case is once we're at a point of control, this is a trading range. This is a range where the market's been comfortable trading before, right around 601 on the Qs, got as high as 620, it just kind of rotated around here for a while. And that's why there's a lot of volume there. So the bearish case is they're just checking the prior point of control. And then that's a place that sellers will step back in. The neutral view is, well, no, we're just going to be in this trading range. And that would be great if we stay in this trading range and kind of build a base. And then the bullish view is, no, we're going to keep going. So, but in any event, it's great to be there. But lots of times day traders and short-term traders will try to sell the rip, and that might be an area where they might step in. We'll see. If no one steps in, it tells you how strong this market is. There's also a trend, a pre-Thanksgiving trend. And it's not just Thanksgiving, it's 4th of July, a holiday trend. Usually holiday weeks are up. So like the day before the 4th of July is a huge up day usually. And I think the day after, and I saw something this weekend on Thanksgiving. So we'll see. I'm nervous, but I'm always nervous. That's just the way I am. I'm always more worried about what I can lose than what I can make. The making money takes care of itself. I mean, I have blocks. If the market's up, I'm going to make plenty of money because of blocks. And I have WPay, which is a good fund that makes money on the way up. I have QLDY. I have K yield. I'll do fine on the way up. I'm always just worried about the way down. You know, I saw a video this weekend. I may make content on it, but it was some guys that are some option bros, and they were talking about long volatility. And one guy described it, you know, specifically long volatility, they were talking about tail hedges, but that's a long volatility trade. It's a debit trade that you put on. So money comes out of the portfolio. Hang on. I just remembered I forgot to do something. Anyway, I can only think about one thing at a time because that's just the way I am. Hang on. Okay. But one guy described it as it's like having a tail hedge. In other words, kind of like ULTI does. They, you know, last week when the market was getting killed, they were outperforming the funds that didn't have tail hedges. They were outperforming blocks and ULTI. But one guy described it as it's like driving a race car. If a race car has better brakes, it can go faster. But so he did a whole thing on tail hedging. I'm going to maybe do something on his video, but let me show you something. All right, sorry about that. Let me get back here. Okay, so gosh darn it. This is something I didn't realize. There's an index that the CBOE has called the P-Put. P-Put is a put protection index. What they do is they own the indexes, but they buy a 5% out of the money put every month. And that's an example of a tail hedge. It's a collar. Well, they don't even sell premium. They just own the index. So they're free on the upside to go up as much as they want, but they buy it put. And this guy was saying, he's saying this thing outperforms all the covered call funds. And it does. It outperforms just about everything. Look at, so let me show you this, and this is why I like ULTI so much. And it goes back to my example of, I'm worried about the downside. I have blocks in WPay and ULTY will do great on the upside. Look at back in June and July, it's fine. But let's go let's go 5 years on P-Put. That doesn't get 2022. Okay. Let's go 10 years. You can see in 20, it's hard to see on this chart, but it was off like 80 points on 8%, So let's compare it with the really good covered call fund. I mean, the really good covered call benchmark is the out of the money, where they sell out of the money calls. This is what JEPQ and JEPI does. I'm forgetting the symbol right now. BXM or BXD or whatever. Anyway, I always thought of long vol as just bleeding to death, and it does make the account bleed a little bit, but it can have uses. I'm trying to show the same example this guy was showing. Well, yeah, there it is. Okay, you can see in 2022 you did better on the downside, but it does bleed, though that put cost you money, and so it, in a runaway bull market you're going to underperform a little bit. But anyway, that's my example. Having a tail hedge is like having brakes on a car, and that's one reason I like ULTY so much. I'll make some content about that. Hey, Mayor, what's going on? You told me, what did Mayor tell me? Yeah, you did tell me ASGI would win. You're right about that. ASGI is a good one. So Mayor's talking, just for anyone who doesn't know, about the about my show, The Daily Factor. Now, The Daily Factor, I come on once a day, usually at nighttime, and we look at the max factor, which is my own metric, which measures the risk-adjusted reward. It gives you the most stable, best performing funds with the least amount of risk relative to all the other funds. And that show's been really good. Yeah. And on Friday, was it Thursday or Friday? We had closed-end fund Friday, I think it was, or maybe Thursday. Anyway, we compare them all. We'll do that again this week. So speaking of that show, we look at a different subset every night. So tonight is Mr. Monday, but so with Mr., I'm trying to think, how do we do it last week? I think I'm going to do Mr., but Mr. is basically Bitcoin. So I'm also going to maybe it's going to be Mr. and Bitcoin Monday. We'll look at Ybit, YBTC, and that kind of stuff and see how they're doing, because Bitcoin's been a mess. Then Tuesday's Tesla Tuesday. And then Wednesday, Thursday, Fridays, whatever we want it to be. But then on Saturday, I do the top 20 show, and I did the top 20 show this week, but I got almost no views. Only 200 people watched it. But anyway, that's fine. But I get more views on the daily show. So I appreciate you guys being here on the daily show. Okay, yeah. Greg, what are you saying? It's Anacotta. Oh, it's anchored in Italian. Okay, anchored. That makes sense. Cool. That's some good knowledge, Greg. That's some good knowledge. Marcus, I want to look into these box spreads. I definitely want to look into these box spreads. So let's go back over here to the market. Come on, market up 2.14. Heck yes. That's what I mean when I say that the market going up, I'm not worried about. Blocks is up twice the market. I mean, when the market goes up, everything's fine. But I'm worried about the downside more. So maybe that's why I really like that guy's speech. I'll do some content on it. I forget his name. But he's a hedge fund guy and an option guy. Now, what I wonder is why hasn't a fund, if P-put outperforms covered calls, and it does, you could go back 30. There's one covered call benchmark that goes back 30 years. I think they sell at the money options, but the oldest benchmark. But yeah, P-put just dogs it, just absolutely dogs it. So I wonder why there's not funds that do that. Why a fund doesn't have a P-put. There is a fund called TAIL, TAIL, and it bleeds to death. But why can't they make a fund just like that benchmark? In any event. All right. Well, yeah, I like the looks of that. So let's look at the pros versus Joe's indicator, see if we're out of the danger zone yet. And the answer is no. In fact, we've been in the danger zone since last Friday. We've been in the caution zone since all month, but we've been since last Thursday, we've been in the danger zone. And sure enough, in that time frame, we have definitely sold off. And the ratio's improving. The pros versus Joe ratio is definitely improving. But you can see right here, I don't know why it says buy there. I think it's a setting in there that it's telling you to buy when the moving average crosses. Well, that's not the way I evaluate these funds. In fact, it's the ops. I'll take that setting out of there. But you can see when both moving averages are red and when the ratio's underneath the moving averages, that's as dangerous as you can get. That means people are putting on hedges. Pros are putting on hedges. And anyway, so we'll see. But then by the contrast, when both moving averages are green, and especially if it's also above the moving average, that's clear skies ahead. And that's back when everything was doing great. That's in that time frame when everything was killing it. But it got cautious, right? We had a yellow light right here. The yellow light came on, and then it turned to red in early October. Then it was back to green, and then back to yellow and red. Now we're yellow and red. We'll keep an eye on it. But you could see, like in April, it turned to red, on February 20th and stayed red the entire month. And it helped you get out of the entire, or it just showed the people, the hedgers knew that was coming, and you could tell it in the ratio. So we'll check that every day. Also, that's something else I like to check. Let's go back to the Qs. Heck yes, Qs. Heck yes. I like to see that. All right. What else you guys want to talk about? Did I forget to show anything? I probably did. We can look at we'll look at that other stuff tomorrow night. Okay. I've already talked about that. All right. For anyone using Schwab, hey, Tiger, and K-Yield are now 30% margin maintenance. Heck yes. Those are two really good funds. I have both of them, and I really like them. I really like them. And I also have ULTY. I really like it. I also have blocks. I really like it. I have let's see how my BITK is doing today. I bought some BITK. This is from Tuttle Capital. This is my only direct exposure to Bitcoin. Blocks is pretty much direct exposure. But not really. But it trades like it is. Look, old BITK is up 2.3. Okay. These guys sell options on the IBIT. I messed that up somehow. Let me get back here. I guess I'm getting the hang of this. I'll get better at this. It's also cool that I can have Discord up in another window. So I can see, I don't have it up right now, but so I can see if somebody's trying to talk to me in Discord. But like I say, what I'm watching out for is just that it's not a sell the rip, that the market gets to a certain point and sellers step back in. But we'll see. We shall see. Okay, so there's IBIT. So IBIT's up 2.8%, and BITK is up 2.3%, catching all that sweet upside. There's still a lot of work to do. There's been a lot of damage done in this asset. Now, part of it was margin calls. People were over leveraged. People think Bitcoin's free money, or trading Bitcoin's free money. It isn't. But also there was some kind of structural thing. Some people got, or something. I was listening to something this weekend. You guys posted in Discord. You guys knew about it. So the glitch, there was some kind of glitch in the system, but that caused extra margin calls. But we'll see. No such thing as free money. Nothing goes up all the time. Things that go up more also go down more, and that's what we're seeing with Bitcoin. It's on the website too. Yeah, I'll take a. Well, let's look. Let's look. So I'm getting the hang of this. I have one window for looking at stuff and one window for StreamYard. There we go. Yeah, look at this weighted average coupon. That's 17.97%. The thing is, they don't want the market to drop more than 40%, but they don't lose on all their positions because they put on a new position every week. So they don't want the market to drop more than 40% from that week. But they may have had a position they put on 6 months ago because they put it on every week. It's laddered, and maybe that one's closer. But yeah, this is really, but you can look at each individual position, and actually the barrier is 30%, I guess. It's not 40%. My bad on that. But anyway, so yeah, it's just a bet against it dropping 30% or more. Yeah, box spread, flex option positions. So you have a long spread. Wonder why it just says long. Well, anyway, and long call. Long put and a long call together make a box spread. They're both deep in the money. And that's because of something. That's because the options are priced on a couple of things. Mainly they're priced on the volatility of the underlying. That makes the option prices more expensive. So better deal for sellers, worse deal for buyers. But they're also priced on whatever interest rates are, because people will use box spreads. And when you use a box spread, what's left is the interest rate, because they cancel each other out. But what you're left with is whatever T-bills pay, 4% or something. Sometimes box spreads can pay a little bit more than T-bills also. But yeah, no, that's really cool. So they added some box spreads. Maybe they're worried about the market getting crushed also, What is this down here? The Mercube, NASDAQ, Vol Advantage, auto. Oh, that's just their auto callable swap, I guess. Or I don't know what that is. TRS received. Because their auto callables are Let's see what relative values are. Well, I think that's what I was telling you guys about. As the market goes up, the NAV of this thing will change because the individual bonds become more valuable. It's a 30% buffer, but if somebody bought it a month ago and the market's up 10%, now the buffer on those ones a month ago are 40% away. So the NAV will go up. Just like if when the market gets crushed, the NAV will go down. If the market goes down 20%, these box spreads will go down too. Just because they'll only be 10% away from the buffer. The NAV still trades freely, the same way covered calls work, but because of the 30% buffer, it's not nearly as volatile and it's a lot safer. Let's check something out here. Let's check out the old dividend channel and let's check, let's run some stuff here. Let's run like SBAR, which is a barrier option. It's similar concept to CAIE. One uses options and one uses auto callables, but even the auto callables are based on the market. So, well, that's a good look for CAIE and a bad look for SBAR. Although on the other hand, SBAR is probably doing what it's designed to do, but I mean that. I'm not saying SBAR's doing anything wrong, but looks like the auto callables are a better bet. Maybe that's the catch. Maybe it's on the upside. The auto callables are a better bet, but maybe when the market goes down, SBAR will drop a little bit less. So yeah, but so let's do this. Let's look at SBAR. SBAR's just beating everything to this CanQ that I like. This is also a hedged equity situation. CanQ does better than SBAR does. SBAR's incredible. SBAR's absolutely incredible. I'm like an old pro on this now. Look at this. I can just run everything. And I can go over here and I can go over here and I can say, hey, Marcus, yeah, SBAR's working correctly. If a black swan happens, the auto callables won't be able to adjust. But that's why they have weekly, though, because as the market's dropping, they'll be buying at progressively lower prices, moving the buffer further away. But yeah, if a true black swan hits and the market drops all at once, distribution 17.9%. Yeah, that's the auto callable swap. Sweet, K yield will be 30% on Robinhood next week. Heck yes. Let's see if I missed anything. Tiger was the one that gave us the tip on margin. Did you guys see, do you guys watch Todd? I like Todd. I don't live the fire lifestyle and I don't believe in, or I don't use margin myself, but I probably would if I needed to, I probably would. But anyway, I saw some comments on Twitter that, somebody said something bad about him on Twitter, but it's just because he likes ULTY, I think. But anyway, that guy is a good example. I don't know if any of you guys watch him, but he has ULTY, but he also has a ton of salty, and when you're on margin, I mean, he's heavily hedged. Thoughts on TDAQ. Hey, Ethan, how you doing? I like TDAQ. In fact, that you just busted yourself, Ethan. On Saturday night, we had a daily factor show and TDAQ won, and it didn't win. Actually, QYLD won from Global X, but I gave it an editor's choice. I knocked QYLD out of the top spot. The Max Factor really emphasizes safety, and anyway, but TDAC was like third or fourth, and I bumped it up to number one. But yeah, TDAC has been awesome. I mean, let's look at TDAC. Well, TDAC hasn't been. Let's check this out. Let's check out TDAC. Trying to think of a fair comparison for TDAC. First, let's just look at the Qs. Okay, so yeah, TDAC's outperforming the Qs, which is good. Now, TDAC is uncapped at night. Speaking of Matthew Tuttle, the guy that runs BITK, he's also a sub-advisor on TDAC. I think he helps Sai Katara's team run the fund. I mean, I believe he's a sub-advisor on T-SPY and TDAC. Well, anyway, he's big in not being capped at night. So they only sell options during the day. They cover before the end of the day. So they get extra upside. You can see when the market was going up, they were ahead. Look at that. They were ahead for a little bit. But then when the market goes down, they're going to drop also, but they're still a little bit ahead. If the market keeps going down, eventually the market will beat them, most likely. But I mean, we'll get back ahead of them, but it's just a race to, in a bullish market, TDAC's awesome. So let's see, what's a fair comparison for TDAC? What kind of yield did they pay? They pay 75 cents. That's a fifth of a year. What's 75 times 5? What's 7 times 5? 35. 5 times 5, like 40. So $4. No, that's not right. They pay 75 cents in the fifth year. So $3.50 or $4. I'm sorry, I messed up a decimal. Okay, so they're going to pay $4 over a year on something that costs 25. That's like 10, 15% or something. So TDAC ought to compare to something like triple QI that also pays 10 or 15%. So let's see how it does compare to triple QI, or it's a fair comparison. Remember, the high yield's great, but it's a tax on the future upside of the asset. So if so other things being equal, two funds that pay the same are a better comparison for each other. And this thing is dogging triple QI. But the reason I say it's a fair comparison, triple QI paid $1.29 because the yield's about the same. So they're both paying about the same tax on upside, and TDAC's doing better. That is a really good look for TDAC. Yeah, so I like that fund, Ethan. Thank you for asking. But I'm still worried about the market. Or I like to watch the market. It is great having the market up in the second screen. Now look at that. We're way over the point of control. It doesn't look like the sellers took the chance yet to sell the point of control. Maybe they'll sell this point of control. Who knows? But that's a step in the right direction. Because even if they do sell this point of control, at some point the sellers will come back in. Hopefully they'll make a higher low. And if they can hold this area, 520, 592, even in a pullback, then we have an inverse head and shoulders. And then, kind of the same thing we had. Well, we have an uneven head and shoulders up here. Here's one shoulder, here's the other shoulder, here's the head. Anyway, but we'll have a symmetrical head and shoulders if we go down and hold 592. And at some point we probably will go down. But anyway, let's hope we go up a lot further first to get a further head start. Look at everything on this screen. I mean, let's look at single stocks. Let's do it like this. Tesla, let's look at Tesla. Heck yes, Tesla. Tesla's fighting to get back to their trading range. They had a trading range, a well-established trading range around 435, between like 475 and 410. They were in a big, broad trading range. They fell out of the range and established a new one down here at 401. But come on, let's get back up in your upper trading range. Even old Tesla's doing well. Look at old Tesla. Heck yes, Tesla. Google. Look at that. Heck yes. And that's in ULTY. ULTY did a good job putting in the more stable stocks. I wasn't for it at first, but they don't ask me to make decisions. But anyway, they did a good job. That's why they don't ask me to make decisions, because of that. Because I wasn't for it, and that was a stupid thing to say, but I wasn't. Anyway, whatever. Well, I should say that because I thought it would lower the yield too much, but they've done something else that I couldn't even conceive of. They're doing a 3-leg collar now to make it where the yield doesn't even take that big of a hit. Instead of selling a call to buy a put like they used to, that's a decent strategy, a collar, but it causes too much put drag. Now they're selling a call and a put, so they're selling a straddle or a strangle. It's like a covered strangle with a collar. It's a collarized covered strangle. Anyway, great job. Now I would expect ULTY to be up they must have something it's down. Yeah, they're up 63 bips now. Heck yes. All right. So Coinbase is also in ULTY nowadays. Then we have AMD's killing it. Look at AMD. Still has a lot of work to do. All these do. Coney's never really recovered from getting beat on earnings. This gap right here was bearish because it wasn't filled right away. But then the bulls tried to fill it, and they did fill it, but then it fell, and it failed, and then fell right back through it, and then the sellers were off to the races. AMDY, okay. Here's ARK. Heck yes, ARK. Here's FEPI. FEPI's a good fund, up 3.02%. I mean, heck yes, FEPI. Misty, even Misty's. Oh, yeah, even Misty's up. Even Misty's up. Qs are killing it, although they did leave their, well, no, never mind. I thought that was, never mind. Amazon looking good. Amazon does not want to fall back into this range. This is a prominent range for Amazon, trading around 220, you know. But anyway, hopefully we'll get back up into this range at 231. And really, Amazon has this huge, they had a huge bullish gap, but that gap turned out to be a bull trap. So there's almost no volume that took place right in here because it fell through it so fast. No one, you know, it wasn't two-sided action. It was just people saying, get me the heck out of this thing. Anyway, NVDY looks good. NVIDIA looks good. Heck yes. Well, that's a step in the right direction. Hopefully it's not just a one-day deal. We really need Bitcoin to go back up. Yeah, Penelope, I don't think I've seen you around here before, but Marcus has a lot of good suggestions. CAIQ is something else. It is a good-looking fund. Is SEPI a good buy now? I mean, I don't really make picks. I mean, I'll tell you this. I like GPTY a lot better. It has the same stuff as SEPI, but it outperforms it by quite a bit. Everyone hates GeoMax. I know it, but it just depends on the fund. I mean, and depends on what the fund's underlying is doing. Everyone loved Alti when Bitcoin was going up. You know, these funds are just a function of how much yield they pay. The yield's a tax on future upside. So the ones that pay a high yield, like Alti, like anyone that pays a high yield, other things being equal, are going to have worse problems with NAV. But the other input is what the underline's doing, because they are able to catch some upside. But no, I like SEPI. I'm just joking. Or actually, GPTY is a comparison to FEPI. And my bad, I got confused. But now that I'm talking about it, let's just look at, GPTY is a monster. I mean, it's also outperforming SPY-I, Triple QI, T-SPY. It's outperforming all of them. It's killing it. But you asked me about SEPI. So SEPI is more of a comparison to LFGY. And I believe SEPI is beating LFGY. But yeah, I like SEPI just fine. Yeah. And LFGY has been having problems lately, but because Bitcoin's pulled back. But you can see SEPI does a better job protecting the capital. If you like protecting the capital, LFGY pulled back more in April. It was down like 25%. SEPI was just down 20%. And SEPI went up a little bit more when the market went up. This is a bad look for LFGY. Like I say, it's a case-by-case basis. These people on Twitter that think, yield max sucks or whatever, that's fine. Everyone has an opinion, but it depends on the fund. It depends on the fund's underlying, depends on the strategy. You can't just make the blanket thing that yield max sucks. But this is a better look for SEPI than it is for LFGY, for sure. All right. Max, want to see something interesting compared GPTY to KQQQ? All right. I did the other day and was feeding it. I made an entire video for all the yield max trolls last week. It was video last week. It may not be anymore, but I like KQQQ. But that's the reason I'm comparing GPTY to QQQY, SPY-I, because those are all and T-SPY, those are all ones that everyone would say they like. And as of that video last week, that was a huge video. It was beating it, but I wouldn't be surprised KQQQ's ahead by now. Right on the money there. I mean, KQQQ's got it. The other day when I did that video, and I put all of these up there, it was beating KQQQ also. But yeah, KQQQ is a good one. I don't have any problem with KQQQ. Like I say, I think these people that just hate yield max or whatever, and they, I have a little bit of all of them. WPay is great. You don't have to have one or the other, I love WPay, and I have K yield. I have really high hopes for K yield. But anyway, I just think a lot of people bought YieldMax and they didn't realize what they were buying. And also, to be fair, like I say, yield's a tax on future upside. YieldMax has the highest yield, and so does Granite shares. So they have the highest tax, meaning that you need to make the most to get ahead. YieldMax is like living in California. You can live in California, but if you just make $100,000 a year, you may not be able to afford a house. You'll be in an apartment. But if you make $400,000 a year, you buy a house. I mean, it's just like living in a high tax state. You can move to Texas. You can make $100,000 a year, not Austin, but Texas, and you can afford a house. But, you know, because it's a lower tax state, it's just a tax on the future upside. I think that's a really healthy way to look at it. But yeah, that's a good looking one, Mayor. I appreciate that. They're almost exactly the same. Yeah. Heck yeah. K-Triple, I have no problem with K-Triple-Q. I had Howard on the day that came out. I love that fund. ULTY is still the go. A lot of people don't believe that, but that's fine. Everyone has a right to their opinion. I'm trying to think what I think the GOAT is. I mean, the GOAT changes depending on what the market's doing. But out of all these funds, I think Blocks has the most potential. I love Blocks. I mean, I don't know most potential, but I think Blocks and QLDY. At one time, a year ago, I thought that I agreed with you, Ethan. But I think nowadays, you know, Blocks and Blocks and KLDY are going to be the GOAT of the next year. We'll see though. Blocks is totally dependent on Bitcoin, so it just depends. Okay, so YieldMax and Granite shares are doing what they said they would. Yeah, I know it, but still, I hate to see that. Can't depreciate if you don't know what you own. Absolutely. I didn't mean to get started on a YieldMax rant. It's too early to do that. Blocks has not much stability. Correct. Blocks doesn't have much stability. I agree with that. I'm just saying a year from now, I think Blocks will be $1 billion fund. I mean, it started with nothing and it has 200 million. I mean, but yeah, if you like stability, stay away from Blocks. Correct. I'm looking for a little of both. I'll take a little bit of non-stability. I mean, I have ULTY. That's not super stable either, but it's way more stable than Blocks. But yeah, WPay is awesome. I mean, I love WPay there. I don't have any problem with that. The weekly was 44 cents per share last week. Yeah, RJ, how are you doing, bud? Blocks is long Bitcoin, Ethereum, whatever they drop. So yeah, correct. I guess what I'm really saying is I like Blocks as long as, I mean, I keep hearing from smart people the Bitcoin's going to be 150, 120 by the end of the year. I mean, if that happens, Blocks is going to, I mean, it's a bullish bet on Bitcoin. All of these are a bullish bet on the underlying. For instance, don't buy Misty if you don't think Mister's going up. Don't buy Tesla if you don't think Tesla's going up. Also, don't buy Tesla if you expect a lot of stability because they pay a higher yield, so it's a higher tax. But maybe look at TSLP. But in either case, TSLP, TSLW, TSLY, they're a bullish bet on the underlying. K-Yield is weekly, stable. Yes, K-Yield's awesome. K-Yield is awesome. Blocks isn't defensive. Yeah, for sure. The thing is, stability's kind of I mean, the thing is a fund, I'm trying to think of a good way to show this. A fund's total return is made of the up days and the down days. Some funds do a great job protecting the downside, like ULTY. They have collars, and they're only down like half or a third as much as a lot of other funds on a big down day. Okay, the thing is though, they don't usually go up that fast either. So the market's comprised of both days. So you may have something like Blocks that drops more on the down days, drops a lot more. It usually drops 3 times what ULTY does, but it makes it up on the up days. You have to look at the entire picture. In my opinion. I'm great with seeing green today. I just hope it doesn't turn around, but even if it does, it's going to turn around. At some point, sellers will come back in. We've had too much damage done to go straight back to all-time highs. At some point, sellers will come back in, but what we're going to watch for is the buyers hold the previous low, and the clue and how we will, and I think the clue to that will be, if Bitcoin can hold its previous low. If Bitcoin takes out its previous low, I bet the market will as well. But their previous low is a long way away. By the same token, the sellers are going to come back in on Bitcoin. They may have already come back in. They may want to keep it in this trading range here around 87. But if they fall out of this trading range, hopefully they'll get stuck in the trading range at 84, the high volume node at 84. They were real comfortable trading here for a while. So, and if they do that, that will be a higher low. And then maybe they'll mount, that people more by the dippers will come in. And then next time we'll run it up to this trading range at 91. It's really important technically that we get through this, in my opinion, that we get through, well, I don't know. It's everything's important, but I would really like to see us get above this area. This is where it really got worse. We were holding 88 and we were, in a trading range between around 91, but we were trading between 93 and 80. We're trading between like 93 and 88 for a while. But then when we fell out of that trading range, then ever since then, we've come back up and we can't get accepted back over, 88, 89 area. That's a problem. That's a problem. But like I say, hopefully we'll set a higher low. But if we set a lower low, the market will as well, in my opinion. I'm getting the hang of this. This is awesome now. I don't know how I ever did it before I had two screens. This is the greatest thing ever. Blocks can't be stable if it's down 30. So I think stability, when when I was talking about like this, but yeah, I agree. I mean, I know what you're saying. So we have blocks and we compare it to, we have blocks compared to ULTY, because I know a lot of you guys don't think ULTY is very stable. I mean, and it is, and it has issues too, but I'm trying to, so that's actually a wrong symbol. I went back too far. Let's just go back for the year to date or something. I'm trying to illustrate something. I don't know if this will work out. Some of my illustrations don't really work out. ULTY, January 1st. What is going on with that? Well, let's just look at the Qs. The Qs will make the same point. Okay, blocks, is it less stable than the Qs? Yeah. However, it's still, if you look at them, they're, it goes down more for sure, but it also goes up more. So when you're, I guess on downside stability, yeah, blocks has almost none, but or no buffer. But if you look at since it's came out, blocks came out June 17th. It still has a positive performance on NAV despite having bad downside stability. And the reason is because it doesn't have upside stability either. Is what I'm saying. The whole pack, you have to look at the whole package. But yeah, if you would have known Bitcoin was going to drop off the rock, you wouldn't have touched blocks. But I agree that blocks doesn't have stability, but blocks can. What I'm saying is you can't always confuse stability with performance, because performance is made of up days and down days, is more what I was trying to say. But yeah, so here's IBIT. So which one's better and which one's worse? IBIT's just directly Bitcoin. Well, blocks is better. Well, why is that? Well, but blocks has less stability than IBIT. IBIT dropped probably half of what blocks dropped. You can just tell by eyeballing it. Blocks dropped like 5%. IBIT dropped, looks like 3 or 4%. But anyway, but blocks get so much further ahead on up days because it doesn't have upside stability either. That's why I think blocks is so good. I like blocks. I like income funds, but I'm a growth guy. At heart. I mean, I want my income funds to grow also, if possible. And it is possible as long as the underlying goes up. And the underlying here's another way to look at it. The underlying has to go up by at least more than the dividend payment and really like twice that. So like MicroStrategies can have positive NAV gain. What does it pay? It pays 80%, but it can have positive NAV. But though, if you look back at the chart, it'll be positive NAV during times that MicroStrategies, the underlying, was up 90 or 100%. You have to at least because remember, like I say, it's a tax on future upside. The dividend literally comes out of the NAV. So anyway, crypto is a wild ride. Well, yeah, I hear you. I hear you, Marcus. Defensively speaking, SBAR will have more chances to protect. Yeah, correct. I agree with that. Um, let's see. Yeah, Marcus is doing well. Thoughts on Salty so far? Well, I don't buy Salty for the NAV. I hope Salty's NAV gets killed. Remember, Salty is inversed in the market. So what does Salty pay? Salty pays what? I don't even know what percentage they pay. Say they pay 30%. So that's a bet that the market will be down 30%. I don't want the market to be down 30%, but for Salty's NAV to increase, the market has to go down at least what the dividend is. So, now Salty's NAV has probably been doing all right the past couple of weeks because the market's down. But you look at Salty's NAV since inception, it's getting killed. Salty's definitely not a buy and hold. It's a hedge. I have it, but I have a small percentage of it to dampen some volatility. And if I knew the market was going to go up, for sure, I would cut Salty, and I've done it before. I had a lot. I didn't have Salty, but I had a ton of YQQQ. I had like 30% of it when the market was getting crushed in April. But then as soon as the tariffs got canceled, I sold like 2/3 of that, and I went down to like 10 or 12% or something. So yeah, Salty's NAV I want Salty's NAV to do fine. If Salty's NAV does well, it means the rest of your portfolio is doing terrible. So that would be my thoughts on Salty's NAV. But we can look at it. I mean, I didn't really answer your question. Let's look at Salty and let's compare it to another inverse fund. Let's compare it to that YQQQ. And let's go just the month of November. And Salty pays a higher yield, and Salty's going to be down more in the month of November because it has a higher tax and the market sucked. So I guarantee you Salty will be down more. Up more because the market was down. I'm sorry. I was thinking of a bullish fund. Okay, well, that's a good look for Salty in November, but of course the market's getting crushed, and Salty shorts a lot of Bitcoin stuff. You look at it over a longer time frame, and YQQQ will do better because it pays less of a dividend. But yeah, I had my thinking on backwards. Yeah. So, because look at the yield. Salty pays 7, so 7, 14, 28. Salty pays 28 on 49, which is like 60%. YQQQ pays 90 cents, so that's 360 on 1370, so that's like 35%. YQQQ has less of a tax on the future NAV upside. And sure enough, even though both of their underlines went down, YQQQ did a lot better. The only difference there is because Salty's giving you more money. The money comes out of the NAV. That's the main difference there. It's just math. Okay, what do you say, Marcus? Blocks will catch most, if not all, the upside of the top two cryptos. It's just a trade. Yeah. Maybe I should have said Blocks is going to be the new GOAT. I just like Blocks a lot, and I like QLDY. I loved a year ago when I got ULTY, there was not a better ETF out there. I mean, you look at ULTY over the past year, or especially once they did their prospectus change. Once they added callers, they put brakes on the car. They had a race car before with no brakes, and they just kept running into the damn wall. Once they put the collars on, Alt-Y, it was the best fund out there, in my opinion. Now, I sold it, I sold some in April because I saw the market was going down, and then bought it back when I thought the market was going up. But there wasn't anything else out there like it. So I'm trying to think what to compare it to. But yeah, even with the market selling off, since the prospectus change, it's up 10% in a little over a year. I mean, that's, but it just was totally dependent on the market going up. If we run it to where the market, the market quit going up, by the market, I mean Bitcoin, because Salty or Alty's highly leveraged to Bitcoin. Bitcoin high was like July 22nd. I think they made a minor one after that. Hang on here. But this illustrates the point that it depends on two things. This is all you, without knowing anything else. Even if you don't know about covered calls, you don't out of the money, in the money, whatever, you don't care about that. Just look at the yield of any of these ETFs, and then look what the parent asset does. So let me try to illustrate this point. Like I say, some of my points work out and some of them don't, but still, I like to see. So this is from the prospectus change last October. So when they put brakes on the darn race car, and this goes to the high in July. You know, I mean, look at that. With dividends reinvested, I mean, Alti spanked the Qs, spanked them. And without dividends reinvested, it was the same as the Qs, but look at the brakes on the darn race car. When the market pulled back, Alti has brakes. That's why I'm saying I'm worried about the downside. If the market goes up, ULTY will do fine. I mean, everything will do fine if the market goes up. I'm worried about the downside. I'm worried about the stuff I can't conceive of. ULTY is one of the best funds out there. And a year ago, it was the best fund out there. Nowadays, there are ones that I think are also innovative. And, you know, I really like WPay. I really like QLDY. I really like K-Yield. I really like blocks. But, yeah, that's what people miss about ULTY. It's a race car with brakes on it. All right, blocks and winter might be decent income combo. Exactly. Blocks and winter would be a decent income combo, in my opinion. I was talking about that guy, Todd, the fire lifestyle guy. He's using ULTY and Salty. And that's a decent income combo. I mean, from him it is, but, you know, now the thing is, blocks only pays like a 35% yield, and ULTY pays 70 or 80% yield. He's living the fire lifestyle. He's trying to generate as much premium as he can. But since he's on margin, he can't be getting margin called all the time. But he has a ton of Salty. He has a 2-to-1 ratio of Alti to Salty. That's way higher than my ratio of Alti to Salty. I have 6% Salty and 15%. Well, anyway, but I also have blocks and other stuff. But I'm way less hedged. But I'm not on margin. So, you know, that, you know. But yeah, blocks and winter. I've never thought about that before. Let's go look at that. That is a good looking idea, Marcus. I mean, it's a solid idea. Let's see, and let's go. Okay, let's go blocks and winter, and this will be since inception. So we'll just look at this first, but then we'll do a what if. What am I messing up here? Oh yeah, I spelled winter with an I. I used to be a good typer, but I cut a tendon in this finger, and I don't have independent. I can't lift like I can lift my middle finger. I don't have the tendon that lifts this, so I have a lazy finger. I did that about 3 years ago. I was trying to cut open a bag of dog food. Anyway, it's a long story. I was supposed to get a fix, but I mean, I don't know. I had to relearn how to play guitar, but my typing, and especially you'll see on things that are on the left side of the keyboard, I used to be a better typer is what I'm saying. All right. So what I think here, let's look at like a 2-to-1 ratio. If we had a 2-to-1 ratio, blocks to winter. So let's just look on a 50-50 ratio. Blocks is up 25, winter's down 10. So you'd be up 15 between the two of them. Okay. But on a 2-to-1 ratio, because I want more upside. I mean, on a 2-to-1 ratio, you would be up 50 on blocks, and this would only cost you the equivalent of 5 or whatever. You can see, but you could also set the ratio the reverse way. You could actually you could try to do it where you neutralize it. I wouldn't advise this but you could also do it where you have twice as much winter as blocks. Anyway, you saw winter, but you could try to balance it. But I think it's good to weight it towards the bullish one. But yeah, that darn sure could be a good one. How much history does blocks have? I wonder. I could get in Portfolio Visualizer and test that and test some what ifs. It only goes back to 6/17 though, so it's just not enough data yet. But I tell you what, I could do. I don't think ULTY in winter would be a bad combination either. ULTY is pretty heavily leveraged into the meme economy. I could get back in. So that goes back to March. Well, when you step back and really look at ULTY on a longer chart, I mean, it's pulled back a little bit, but I did. Yeah, I was going to say, because I cut it off too soon. Hey, I was going to say that doesn't look too bad, but that's not reality. All right. Yeah. So look at ULTY in winter. If you had twice as much ULTY as winter, winter's up 16, so you'd only get 8 from that, but you would have got 28 from ULTY, you'd still be up 20 between the two of them. But on a 50-50 allocation, you'd be about even right now, So if some guy like Todd, that's good for somebody that's on margin trying to live the fire lifestyle. You just don't worry about NAV and just don't worry about NAV upside and just try to protect downside. They both pay a yield. I mean, I've seen worse ones than that. That's not a bad look. The reason I say 2 to 1, I'm going to illustrate the 2 to 1. The reason I say that you want to balance it towards growth is because of this. Oh gosh, I messed it up again. Is because of this. Because you don't want to, you want to perform well when the market goes up. I do. And if it was 50-50 in July, you'd be even. You'd be wanting to shoot yourself. I'm just joking, but you know what I'm saying. You'd be wanting to hit yourself in the head or something. But on a 2 to 1, this would be up 48%, and this would be down 11, and you'd be up 30 between the two of them. So that's why I say I bounce it. I choose blocks either, Marcus. I was just showing it because of because it's been around longer. I'm with you on blocks. Or wait, I choose blocks over Misty because Misty's kept. Yeah, great choice. Great choice. I agree with that. I agree with that for sure. COIW and Fiat. Oh, you're talking for yeah. I mean, that could work. Heck yeah. I'd still go without even seeing the results. I'd go twice as much COIW at least. But right at a 50-50 allocation, they'd both be up. Between the two of them, the pair would be trading up right now. And yeah, between the two of them. So, but yeah, that one works out. That one looks really good. Now that just goes to the July rally. Let's look at it through right now. But yeah, somebody on margin, because you can't have everything. If you're on margin, you're taking out a loan, you're adding to your risk. So and margin calls are a thing. So somebody on margin that's trying to live off these, I think that this is a better idea. You can also use Tesla and Crash. So right now the pair would be down, but you wouldn't get any margin calls is the thing though. If you're on margin, you'd be mad. Okay, the pair's down, but I mean, there are no margin calls. And you could even see, because when one of them's really down, like when Fiat was getting killed, the other one's really up. You could see right here, COIW was up 35%. This one was down 42%. So you'd still be behind. That's why I say not if you have twice as much COIW as Fiat. Then you'll be doing well in the good times. It's still a bullish bet, is you still get some upside. But I think 2 to 1 is but you guys, not financial advice. Heck yeah, Greg. Blocks doesn't hold any Mister. Actually, I did a report on it today, and I thought they did have just a little bit of Mister. But I could be wrong. But let's look though, because I'm not sharing this screen. But look, I know how to run this stuff now. Look how good this is. I'm just going to go like this. Or I'm turning into an expert. Look at that. So here's the Super Sextet, which is updated. So let's look at blocks. Or actually, I don't know if it's updated, but as of Friday, they had less than 1% of Mister. But the things that are helping them are Cipher Mining, Iron, HUD 8. I mean, they're killing it. They're up 7.8% now. Heck yes, blocks. I wish I would have bought more, but I still don't think this is over. And I'm always worried about the downside. If it goes back to all-time highs and I didn't get a chance to buy the dip, that's fine. If anything, I'm really thinking about adding some CAIE or some kind of barrier fund. I have cash on the sidelines, but I just don't know. I just don't know about piling it back into something like something that's so related to Bitcoin. Like, I definitely don't want any more ULTY. I have enough. It's nothing wrong with it. It's a great fund. I definitely don't want any more blocks. I have enough of it. Maybe I'm either going to add QLDY, the Lightning Spread Fund, or maybe CAIE. Marcus has been trying to talk me into getting CAIE forever. I'm too stubborn to listen to him, but I darn sure should have. So look at LFGY. Do they have Mr.? They don't have Mr., at least as of Friday. But they also have partially capped upside. So you can see they're only up about half as much as blocks. But last week when the market was pulling back, they were down less on any given day than blocks because they sell call spreads, not put spreads. Anyway, so that's are you guys seeing that? I can't tell what you guys are seeing. Okay, yeah. Okay, I'm getting used to this. So let's look at ULTY and see, do they have Mr.? They don't have Mr. What they've done that's really helped them is adding Google and adding that 3-leg caller. A big thing that I think I heard through the grapevine, the traders and the people that manage ULTY weren't happy with the drag the put was causing. The put is good for people like me that are panicking, and I can always say, well, look, Alt-Y protects capital a lot better on big down days, and it does. It protects capital better than just about any of these funds we're talking about. But it causes too much drag on the upside because a put has theta decay. So anyway, now that they've sold 3 options, they used to sell 1 option and buy 1 option. Now they sell 2 options and buy 1 option. They've offset a lot of that theta decay with that second option they've sold. And it also, so they do that, but they only do that on the funds that have low IV, because on the low IV funds to put on a collar was just too costly. So on Google, they have on the 3-leg, it's like a covered strangle. They have that on in Google, Costco, and kind of the more boring funds. I heard Mike Coe talk about it the other day, and he was talking it was to boost the yield up. So that's why they have that extra option sold, but it also cuts the put drag, in my opinion. I'll ask Mike Coe next time I talk to him. All right. So, and thank God what doesn't. What are you talking about, Marcus? And thank God it does. Oh, it doesn't have MicroStrategies. Yeah, it just has a little bit, but yeah. It needs to be long Bitcoin anyway. Yeah, you're right. So it has enough exposure to that business without having it. They must have bought some recently. So yeah, I swear I got that Friday, but I don't know. I can't remember if I remember to hit update on I can't remember if that's Thursday's shares or I think I did hit update though. I think that's today's shares. Yeah. Oh, Froggy's in the house. Hey, Froggy, what are you doing here? What are you doing in here today? Yeah, Google's looking great. Did you guys saw what ULTY did on Friday, right? It was up 2.5%, where the SPY and the Qs weren't even up 1%. I mean, it must be doing something right. I think a lot of that was Google. It was up 3%, but they just did a really, really good job on Friday. Hey, Mark's in the house. Mark, what is going on? We got Mark, Greg. We got the whole crew here. We got 62 of you guys here. Yes, Mags is doing well. Let's make an apples to apples comparison with Mags. It's doing well, but last time I checked it against stuff, it's not doing as well as competitors. But I'm not saying anything wrong with Mags. I like Mags. I like Mags just fine. Don't have any. That's doing really well there. Look at that. I don't know what I checked. Maybe I checked a different time frame or something. Heck yeah, that looks great. So let's look at. So here's what I'm thinking. Even without knowing anything else, I bet it has a lower yield than YMAX because it has a lower tax. Mags is like living in Texas. YMAG is like living in New York or California. So Mags pays a 44-cent dividend. Okay, and this one pays 44 cents on $46 is. For a year, that's not that much. That's 8% or something, but that's good. That's what I'm kept some upside. Yeah, and this one pays, an obscene amount. Okay, well, I forget what I checked out. I checked out something, and mags didn't look good against something. But let's go year to date on. Let's go year. But yeah, mags is a low tax state. I'll say that. If you can get by with 8%, look at mags. Look at mags and GPTYs. But yeah, that looks really good. That looks really good. Why does mags have no dividend per share there? Does mags? Oh, I was talking Maggie. I'm talking Maggie. Maggie gets spanked by a lot of things for some reason. Yes, mags is definitely a low tax state. Mags is no taxes. Mags is if you live in the Cayman Islands and you don't pay any taxes. Mags if you Mags is the ultimate low tax state. I mean, they had a little dividend, but it was like 8% or something. But yeah, that's a bad look for Maggie. And especially because Maggie pays less of a dividend than YMAG. YMAG's like living in California. Maggie's like living in, Texas, and it still doesn't do as well. Let's confirm and make sure that's true. Maggie paid $10 on 50. YMAG pays 4 on 14. Yes, 4 on 14 is higher than 10 on 50. YMAG is beating them in both areas of the ball game. Like I say, a lot of people just hate YieldMax and won't buy it, but it's a fund by fund basis. I get it. It's you do you or whatever. Yeah, and then if you look at GPTY, which is similar stocks, it's to Maggie. I'm not trying to go on the Maggie rant, but I mean Maggie's, And then if you look at Biggie, BIGY, let's see if it beats it. Not by as much, but it still beats it. Yeah, I know you said mags. Mags is good. I was just giving you a hard time today. Yeah, ULTY had a good day. It's just one day, but it's good to see. All right. So what are you saying, old Doug? I haven't seen you in here before. I don't believe. My best friend in Oklahoma's name is Doug. And so I would recognize somebody's name. I would probably remember somebody's name that's Doug. So you use QLNEX as an ongoing soft hedge. Really? Okay, not an income fund. That's fine. The world doesn't revolve around income funds. QLNEX. Really, income funds probably don't work well as hedges as well as other things because they're capped. I mean, because anything that pays an income is not they're capped, they're taxed. They pay it because it's an income fund. There's some kind of tax coming out of the return, right? So let's look at GlenX and let's compare it with, let's see if it would stabilize ULTY. I don't know if anything will stabilize. I'm just joking. Okay, well, it's probably a mutual fund or something that doesn't show up on here. But yeah, that's good. I love long short funds. There's a long short income fund coming out. Let me make sure I type that. Oh, it's QLNEX. I'm sorry, QLNEX. My bad. I'll go back once I get this right. QLENX. Gosh darn it. All right. Well, I'm not having any luck on that, but yeah, long short's cool. I'll show you if I had to do one that didn't pay a yield, just based on what I know, I would do this one. Chaos. And Chaos could also smooth out Altis performance. Let's go. Yeah, we'll just go year to date on both Chaos and ULTY. Chaos does not pay a yield. It's not really a hedge. It's not an inverse fund. It's just super steady though. And it's super steady. One thing that's super steady, and another thing, it was up in April, but if you had 50-50 of these, no, you wouldn't be hedged, but instead of being down 17%, you're up 3%, or you'd be down like 14 or 15. It just adds in a little stability. But I really like the idea of Chaos. It's about it give you a little downside buffer. Ever since the court ruling, Google has been running. Yep. Check meme. All right, let's check meme. Let's check meme and Chaos. I don't know. I like Chaos a bunch. Now meme. Yeah, meme's having a little problem lately. Meme doesn't look like it has a lot of stability, but I'm just but it's the same reason Blocks has been having problems, or any of them. Now it looks like Meme has been having even more problem than Blocks. I mean, but whatever. Meme looks like it compares pretty well with ULTI. Not a bad fund. It just got off to a rough start. Not necessarily a bad fund. It's too early to tell. Yeah, Meme does outperform ULTI. Let's see. I bet Blocks outperforms Meme. I like Blocks. I'm a Blocks super fan. But don't buy it. I mean, because I like it. I'm wrong at least half the time. Yeah, Blocks is good, I think. But yeah, so what I'm interested in is Vibe. Does anyone know when Vibe's coming out? Yeah, I know it. Well, doesn't Maggie sell options in Mags though? Maggie's underlying. Mags is Round Hill, and but it was probably before I figured it out. But they sell options on Maggie. I'm not saying anything wrong with Maggie, right? They're both from Round Hill, is why. And I thought Mags was the underlying. I could be wrong. Like I say, I'm wrong about half the time. So let me know if I'm. CLSE is another good long short fund. Correct. Let's see if CLSE could help Alti out. If you could have those as a pairs trade, how that would do. Yeah, look at CLSE. This would definitely help. You could definitely, no yield, but you could definitely potentially, if you had a 50-50 allocation, you'd be up. Now on the downside, CLSE lost money also, but it didn't lose quite as much as ULTI. So instead of being down 16 or 17% like ULTI was in April, you'd be down like 14 or something, about the same difference that Chaos would have done. But Chaos wouldn't be up as much right now either. CLSE looks like a better alternative. Great call there. Great call there. Yeah, I know it. I did a video this morning where I looked. In fact, I have those. Check this out. Well, I'm getting so good at this. Look how good I'm getting at this. Check this out. So here's what they actually have. I got this as of the close on Friday, or I got this like Sunday. So some of the funds don't update till Monday morning. Maybe they did an update Monday morning that you've seen and I haven't. And if I apologize if that's the case. But here's what I notice on the options. Look at this. Call. Well, not that. What happened to their 4-leg spreads? Oh, there it is. Okay. Looking bullish. And this is the same for all their things. They have short 83, long 83, or short 83, long 83, but then they always have one leg that's double. That's how you can tell they're hedged. They buy double puts. That's a caller. They use these other 3 legs to make the money, or they use the other 3 legs. The other 3 legs finance this double long put. So they're hedged on bullish under 33. And I did a show this morning. They're hedged on all of these. They don't have any that are unhedged. You can look at them 97, 194, 229, 229. Maybe that one's not hedged. Let's see. Is Oscar not hedged? Call, put. Well, maybe Oscar isn't, but in any event, something's acting different from the way it was this morning. I think this graphic may be messed up or something. But yeah, so you said they changed their holdings. Well, here's what I have for their holdings. But they've added hedges, and they did that last week too. They've been doing better since they collarized their trade. They used to have a trade that was more like blocks, that was just got all the downside the market got and then some. I mean, but they've collarized their trades. I noticed it starting maybe a week ago. Anyway, they have Oscar Health, SanDisk, Lemonade, Nanonuclear, Galaxy. How do you say that? Does anyone know how to pronounce that, or what do they do? It says RE. I was wondering maybe if it's real estate, and it's Unique Real Estate is what they're trying to brand it as, and they call it, but I don't know if they call it Uniqra or whatever. If somebody knows how to say that, let me know. Okay, so they did put out new things just this morning. Okay, because I downloaded these yesterday. So you say they subtracted. Okay, so Oscar John. Okay, I'll re-download this. This graphic updates every day. I'm sorry. Okay, well that's good information. Let RJ. Thank you for putting that up. So they added AI, Astera Labs, applied. Sounds a lot like ULTY with. ASTS, Cipher. They're going all in on crypto. They're trying to buy the dip in crypto. Is that the way you take it? But that sounds like ULTY's portfolio. Rocket Lab, Oklo, Astera. Anyway, and then they subtracted. Okay, so they subtracted CleanSpark, CSIQ, GSAT. All right, they subtracted a bunch of those. Okay, good. Yeah, sorry about that. Gosh darn it. I'm going to start doing a daily show on all 4 funds and their positions, but I need to get up in the morning, download the latest file, and then make the video really quick before the market opens. So I made this video really quick before the market opens, but I thought Sunday would be enough time for the new file to be up. My bad on that. Yeah, and they post on X. Okay, that's cool. That's cool. All right, I'll update that video. Or that graphic. I'll update that graphic before the end of the day. So, and do we have anything else to look at? The Super Sextet. Because these other ones, the stock positions are right. Like that's Alti's current stock positions. We can look at Salty. Let's see what Salty has in the portfolio. Tell me Salty's not shorting the. Wait a second. I don't think that graphic's right. Because the Q's are. Anyway, the graphic's obviously not right. All right, well, I need to go work on that. Let's see what the market's doing. Bitcoin is still up. Still up. It got a little bit over its skis out here and then pulling back right to the mean. It kind of looks like reverting to mean, but as long as it reverts to this higher mean and not this mean or whatever, I'll be happy. But we really still need to take back this. This was a major, this was bad. We need to take back the 88 to 89 area. But in any event, let's look at the Qs. The Qs still doing well. Still doing super well. Yeah, RJ, I appreciate you for pointing that out. But that's going to be a daily show. I'm just going to get up at like 6 or 7 and download that file, update the graphics, and do that. I'm trying to make it a quick, like a 5 or 10 minute show. I'm not showing option strat or talking in depth. I'm just saying, what's hedged, what isn't, what do they have, what do they not have. Neos has been pre-assigned symbols for their boosted ETFs, but they don't have any time to come out. Now, who's the one that's going to have a long short income fund? That's Neos also, right? But I wouldn't think that would be a boosted. But I've been hearing about a long short income fund. But that's good to know, RJ. I appreciate that. XSpin, Neos. Okay. XSpin. Okay, that's a cool one. That stands for probably X S&P income or something, or the X is probably their boosted. Yeah, that's Neos. Okay. XBCI is Neos boosted high income Bitcoin. Heck yeah. So boosted. So who are they trying to compete with there? I don't know if I've seen that prospectus. If I have, it's been a while. Are they boosted in the same way that WPay's boosted? So they 20% a week, or they boosted in the way that MST's boosted from Defiance, where they're 100% a day, or the double leverage every day. Anyway, but yeah, that should be interesting. And then you have boosted in the way the Granite shares is boosted, which really isn't leverage. They just sell leveraged options, so it boosts their yield a little bit and it boosts their risk. No, that's good to know. So XSPI, XQQI, and XBCI. Can't wait for those to come out. Really looking forward for the income blast to come out from Tuttle Capital. It's not going to be leveraged, but they're going to do lightning spreads, so it's going to be full upside. 1.25. Okay, that's good. I was just hoping they don't double boost it. The double is just when something has double leverage, that is true erosion, not what these high yield funds have. That's real erosion. It's caused by the daily reset, or it's volatility erosion. These high yield funds have a lot of depletion, but in any event, but the like WPay did pretty well on the way down, even though it had 20% leverage. Last week, it went down a little bit less than even K yield and even ULTY, which do pretty well on the downside also. But it went down a little bit less despite the leverage. But I think it's because they don't have that much leverage. 20% a week is like 5% a day. That's not too bad. So heck yeah, you haven't seen the long short. I think Marcus knows about that. I think Marcus was the one that told me about the long short NEOS fund. But yeah, this is awesome how I leave the freaking screen up here and I can still take questions, but we can watch the market. I mean, did you guys hear I got a copyright strike on Saturday night? I came on and the Tennessee game was on. Who's Tennessee playing? Is it Tennessee? I already forget. Tennessee, Georgia, not Georgia. Tennessee, Florida, right? I forget who it. Anyway, and we didn't even have the volume up or anything, but it was just on behind me. But I got a copyright strike, or I don't know if I got a strike, but I got demonetized. Those live streams don't really make much money. None of these live streams make much. They're more like loss leaders. I'm trying to do them so you guys want to watch my regular streams. And since I've been doing a lot of live streams, my regular streams have got better. Yeah, ULTY is supposed to have protected puts. It does, and that's why it loses a lot less than a lot of other funds that don't have protected puts. So there's two things that go into how a fund's NAV perform. One is the yield, okay, and the yield is, and this is independent of whatever options they have. We don't even matter what options they have. A fund that pays 80% needs the underlines to be up at least 80%. Alti's underlines aren't going to be up 80% this month. That's why they're bleeding. But this summer, Alti's underlines were on fire and ULTY went up. So they do have protected puts. The protected puts don't keep them from losing money. They just keep them from having a black swan. Let me show you this. It just keeps them from losing more than 10% or so, however far the protected put is away. They can still lose 10% down to there, but they can't lose 30%. They can't lose 40%. So let me show you the story of two Altis. So you have Alti from when the time it first came out to my birthday. They filed the new prospectus change went into effect on my birthday last year. All right. So they had no protected put. So it's like a race car with no brakes. We were talking about this earlier, but maybe you weren't here, or not about ULTY specifically, but this is like a race car with no brakes. All right. So, well, let's compare it to the SPY. Yeah, they were like a race car with no brakes. Look, they were down like 13% when the SPY was barely down anything because they, and the other thing is because they pay 80%. They need the stocks to be up at least 80% in their underlying. The SPY was only up 15% over this time frame. They aren't really in the SPY. They're more correlated to like something like IBIT. But IBIT wasn't up 80% during that time frame, I don't think. Yeah, no. I mean, IBIT was, so that's two things. They need their underlying to be up at least 80%. The other thing was, then they did change their option strategy. So you look back at a time when they changed their option strategy. So we're going to go from October 15th or October 1st, it's fine, to in a time when the underlying was up. Let me pick a time when the underlying was up. So, not Alti's fault their underline's not up. You have to sell options on something. They sell options on Bitcoin and meme type stocks. But Bitcoin and meme type stocks did very well over this time frame I'm getting ready to show you, and they added the protected puts. So yeah, so see, their underline was up 93%, and Alti was up 17% over that same time frame. So, and let me show you another way. Also over that same time period, Alti outperformed the Qs. The Qs aren't really their underlying, but that's impressive that they beat the NASDAQ, but that's what's one thing. Look, they didn't go down as far because they do have protected puts. You can see them working right there. All right. And the other thing I was going to show you, just forget about the underlying for now. You saw what Alti looked like before the protective puts. Let me show you Alti since the protective puts. See that here's Alti since the protective puts. They haven't had any days where they're on that other one. It was like a race car with no brakes. They were down 17.5% in the first month when the market wasn't even down anything. Once they put on the puts, they're doing a lot better. So they absolutely do have protective puts. That's why that's one reason I like them so much. Yeah, I should explain protective puts being straight up short. Maybe I'll do that some other time. But yeah, I know I absolutely should. Yes, because there's a misconception of puts. Yeah. Well, the thing is an at the money put is a straight up short. As we talked about this weekend, there are funds that have at the money puts, and but why? It depends on where you put the puts. They put the puts 5 or 10% out of the money, so they can't lose more than 5 or 10% on any one stock. But it's a synthetic short under the strike. But yeah, people, I get that, and short trading is confusing and stuff. But yeah, I think puts are better than being short, because when you're short, you're unlimited loss on the upside. It's the opposite of being long a stock. If you buy a stock, how much can you lose? The whole thing. It can go down to zero. If you lose a stock, if you short a stock, how much can you lose? The whole thing. It can go up to infinity. The whole thing plus more. But yeah, Alt-Y doesn't keep you from losing money. It creates a buffer. But what I was trying to show is, you look at a fund like T-Jewel. We were talking about this weekend on the weekend live stream, a buffer fund. They have at the money puts, and they can't lose any money. They essentially are short. I mean, but because they're because they're short using puts, they can still get some upside because they aren't just directly shorting the market. Shorting the market's a bad idea, I think. But let's look at T-Jewel compared to the Qs or something. Yeah, they can't lose money. They're short at the money. So I mean, this is like a short, a fully protected position, let's say. But so why don't they make as much as the Qs? Because at the money puts cost more than out of the money puts. So the at the money put is a huge drag on their performance. They can still get some upside, but they get a lot less. Whereas if Alti did that, if they used at the money puts, they would have no upside performance. You guys saw when the market went up, ULTY went up more than the market because it's a really badass fund, but it still needs the market to go up. If they had their puts straight at the money, they would pay a lot lower yield because they would have more put drag, because at the money puts are more expensive. And another thing, they would cut off a lot of their upside. And it's definitely a bullish bet. But yeah, good suggestion, Marcus. I hope I did a good job explaining that. I think the misconception on puts are that they cut off all the downside, and they do cut off the downside below the strike. But ULTY, in fact, we can look at that. Watch this. I'm getting to be such a pro at this. Look at this. So here's ULTY's option positions. So on Affirm, their puts are at 56. So they can't lose any money under 56. Well, now let's go look at Affirm. Let's go see. I mean, Affirm can't hurt them. They can't. What the way Alti does, it keeps them from bag holding. Anyone that's done covered calls or even the will has ended up bag holding. It's a part of the strategy. So Affirm is at 66. What were they hedged? 59 or 56? I forget the number. But yeah, they can lose. But if Affirm misses earnings and drops 50%, they're essentially short at 59 or 56, wherever that was. They can't lose. Think of ULTY as a buffer fund. It's like a buffer. Their puts buffer the downside, and it's like I say, it's why I like them so much. And ULTY did better than any of these other funds last week than Blocks or ULTI. They were about the same as K Yield or WPay. WPay did a little bit better, but then the reason was because they had their downside capped under a certain point, or defined. It's defined risk. It's a cool thing about selective shorting is they have the chance to still make money. Yes, if you short a stock, you don't have any chance to make money. But if you buy something, if you buy puts, you still have some chance to make money. The put drag subtracts from the put drag can cause another problem. You won't make as much money because you're having to finance the puts. So put drag. So I'm trying to think of a analogy, but I thought of one that is kind of sexist and misogynistic. I've been trying not to be sexist and misogynistic anymore. And my mom wouldn't be, she's not alive anymore, but she would be disappointed in me. So I need to quit making so many locker room type comments. But, and I think I've been better at not doing that lately. But in any event, so if firms like partially hedged, now we can look at any of their stocks. Astera, they're hedged under 115. Celsius, they're hedged under 40 or under 37. They're hedged under the put strike. And when I was talking about on these ones that do the 3-leg strategy, look at Costco, because Costco doesn't pay a real high yield. So they wanted to bring in more yield. So what they do is they sell 750 calls at 905, and then they sell 750 puts at 870. Regular callers don't do the extra sold put leg. Well, that extra income from the sold put helps offset the drag from this 835 put. But they buy twice as many at 835. They're totally limited on Costco. They can't lose or hold the bag under 835. That's the way all their strategies are either two-leg callers where you sell a call and you buy the same amount of puts. A 3-leg caller is where you sell a call, sell a put, and then buy twice as many puts as whatever that number was. I didn't notice this, but look at these guys. They have IBIT just straight long. Unless this, they just made a bullish bet on IBIT. So that's like going long the stock at 53. That's a baller move because those IBIT calls at 53 probably doing pretty well today. They have 6,800 of them, because you can look, because it's a bullish bet on IBIT. But that's what's so badass about options. It's going long. If you went long stock in IBIT, you can lose down to zero. If you go long a call in IBIT, you're still long above the strike. It's the same way you're short below the strike in a put. Long above the strike, but you don't have limited downside. You can only lose what the option costs. These 53 strikes, well, they're still out of the money, but I guarantee you that from the Friday close, I'm trying to think of a way to show they're up big time because IBIT's up from 47 to 49. Those are doing great. Anyway, great job. So maybe Jay and the traders think the bottom's in, or if not, they're just taking a shot, then maybe it is. But yeah, that's baller, and I didn't notice that earlier. When I did my video, I should have spoken about that. I didn't notice they were just straight long on IBIT or long through options. But then everything else they have is either a caller or 3-leg caller. On the volatile stocks like Palantir, they just use the 2-leg caller because that brings in enough yield by itself. But on the ones that are more boring, like Costco and like they like Facebook, they have the 3-leg caller on. Facebook's IV isn't super high, so they sell the 585 put, they sell the 600 call, so that's a strangle right there, and then they buy it's a collarized strangle. It's a lightning strangle. I don't know what to call this, or it's a collared strangle. I just call it a 3-leg collar. But see, they own twice as many puts in Facebook. So if it turns out that Zuckerberg was on the island or something and that Facebook's stock drops 50%, well, it doesn't matter to these guys. They're if Facebook could drop to zero, they're out at 550. That's what makes ULTY so badass, and none of the other funds do that. Really run callers. ULTI just started recently running callers, but Blocks and K-Yield, they don't. And the callers aren't the only answer. Blocks and K-Yield are decent stocks. They don't run colors. KLDY, the Lightning Spread Fund from Defiance, is a great stock, doesn't run colors. You don't have to run colors, but for somebody that's a panicking and really likes protecting the downside, ULTY makes a lot of sense to me. Like I say, it'll go up when the market goes up. I just don't want to have I want to have brakes on my race car. Okay, yeah, Salty's a bit of a paradox, only goes up when the market goes down, pays a great dividend, fast compounding, etc. Yes, Salty is, I think it's doing what it's supposed to do, but yeah, it's the opposite of these other funds. That's why it's a good hedge. On GRNI, Ethan, I don't think that has enough data to look at. Didn't that just come out? I think it did. I think that did, but so I would bring it up on the dividend calculator, but it's not going to really show much. But just for people wondering what the heck GRNI is, it's the Tom Lee managed fund, Granny Shots. Let's look at it like this. Let's see what they have in it. Now, but it's the income version of Granny Shots. Now, Granny Shots is, like I say, it's Tom Lee, and it's the funds he thinks, I think it's the funds that he likes and that he thinks are the ETFs that he thinks are fundamentally strong, growing earnings faster than the market. And they're also, he has several qualities. They're also in disruptive industries. And you can go listen to him talk. He's on CNBC every day. But anyway, so here's what Granny Shots has. It has Google, and he made a good pick on that. It has John Deere. It has Monster Brewing Company, PNC. It has a bank, S&P Global, whatever. So that's just a global S&P. Okay. It has Apple, Costco, Facebook. Great ETF. So what he's done with GRNI, I believe he owns the same funds and just sells covered calls on them. So he's going to have, some of the upside that GRNY would get, not as much upside, because GRNI is taxed. They're taxed by whatever the dividend is. They haven't paid one yet, but I bet they pay 30% or something, 25%, just by looking at these underlines. It'll probably be like a FEPI. It'll probably, I would imagine, like a FEPI. You'd probably pay 20, 25, 30%, something like that. But, and we'll see how it does, but it should be fairly stable because it has pretty stable, because it has blue chippy stocks. Blue chippy stocks can go down also, but they generally won't drop as fast as non-blue chip stocks. So yeah, GRNI could be a good one also. I'll keep an eye on that for sure, Ethan. That's a good one for sure. But yeah, did I answer your question? I mean, 1320. I never think of a name to call you. I see you in here all the time, but like RJC, I get nicknames based on the thing. Like I don't know what to call RJC either, but 703 or RJC, but I call him RJC. I figure maybe his initials are RJ or RJ, whatever. His name's probably Robert John Carlson or whatever. But anyway, so I think of nicknames for you guys, but I'll start calling you 1320 because I never know what to say I can't pronounce the other part of it. But yeah, it's not a dumb question at all. There are no dumb questions. And that was a good comment, 1320 on Salty. I appreciate that. All right, Randy, I'll remember that. I've thought you were maybe RJ or, maybe your nickname was R. For some reason, sometimes I'll call you RJ or something. But I'll call you Randy if I remember, and I may not the first time, but I'll remember eventually. But yeah, just like I know you have a Texas name, so your name is let me guess, Randy John Corpus Christi. I don't know. I was trying to think of a C name that has something to do with Texas, but Randy James. Well, John sounds more Texan to me. I don't know, but yeah, heck yeah. Heck yeah. All right. Yeah. In Tom Lee, we trust. Absolutely. Tom Lee's a good guy. All right, Ethan. Yeah. Thanks. Ethan hasn't been around as much. He has been around lately, but for a while, Ethan went away, or I didn't see Ethan for like a month, but I'm glad you're back, Ethan. You've been showing up lately. All right. There's 60 of you guys here. I'm going to let you guys go and get back to trading the market. Let's look one more time at what the market is doing. IBIT still bouncing. That's good. Triple Qs are still bouncing, and I was going to look at my ratio, but the ratio is improving. Everything's good. All right, guys. Well, I'll let you get out of here. I I did see this one, Randy. TDAC paid you 37 cents last week on the monthly bet. That's nice. Were you happy with that? I hope you were happy with that. Sorry, I didn't see that. All right, I'm gonna let you guys get out of here and go make some money. I need to make some videos. I have a video that I'm gonna record, and then I'll be back here at 5 o'clock Eastern for the afternoon show. Okay. All right, guys. Thank you very much. Have a great day. I'll talk to you soon.